Welcome to another quarterly review. It's been another 3 months, and what a 3 months it's been. In this review, we're going to touch on this past week, how we've done the same way we do each week in the weekly review. And then I'll just expand that to the performance for the quarter, which I think this time round won't be as in depth as I'd like it to be, because a lot more emphasis at the moment, at least, is placed on the reviews I do at the end of my 20 trade sample set when there's significant changes that come into the plan. But I think nonetheless, still a few things to touch on with how the quarter's gone, and some initial feedback that I'm seeing from my data. But I do think that going forward, and especially my quarter four review, is going to be probably the biggest to date, um, just because I will have a full quarter of data with the current plan that I'm trading. And so I think there'll be a lot more insights in that review, um, as a result of a lot more data that I would have accumulated at that point, to then touch on and review and see what sort of actionable insights come out of that. So just before we get into the weekly review, if we remember, the start of this quarter was myself and Tara moving to Cape Town, a big shift for myself in terms of the work that I do from a corporate perspective. And I touched on that in some of the videos that I released at the beginning of the quarter. But I think equally as important was the shift in focus, as I really now dialed into my prep for the $100,000 challenge, which Marcia and I started at the beginning of September. And so this is a nice point to almost touch base on how that's going. Um, yeah, and this month, or this quarter rather, was filled with so much prep and just so much deep work and so much growth. I think massive growth. And to think that's all happened in 3 months just also makes me excited to touch on obviously what's coming at the end of this quarter. And yeah, I'll touch a bit on that towards the end of this video. But yeah, I think without delaying it any further, let's just jump in and take a look at how the week, how we did for the week. Again, two trades taken, two winners this time, so 100% strike rate. And yeah, about 3.5% up on the $100,000 challenge. That brings the total balance to about 105,300, if I'm not mistaken. But we'll look at the Alpha Capital terminal to get that exact value in a second. But yeah, a really strong week, a really strong end to the quarter. This month was the best fun month for me in the quarter, and when we get to the quarterly review, we'll just see how it compared to some other months. But yeah, two really well executed positions, and just looking at kind of some things that I did well this week that contributed to that was forecasting entries that met the plan and then executing those entries without hesitation when the parameters and confirmation were achieved, because there was a bit of doubt with those two positions that ended up playing out, as to whether they would play out, just given the volume at the time. So really glad that I did stick to that forecast and kind of just stuck to the plan and let go of any expectation that I had going into the trade, because that's how I want to behave with each and every single position. I shouldn't expect to know what's going to happen. I should just follow the plan. And over time, obviously, that would increase the accuracy of the data that I'm then reviewing to increase that plan kind of going forward. And then forecasting multiple scenarios on pairs, and was clear on my trade parameters that made me risk on, and just made me risk off. So I think that just kind of just contributed to the clarity that I had in the market. I was clear with what I was looking for. I was clear with what I wasn't looking for. And that led to obviously the decisions that I made to either execute on positions and, decisions that I made to not execute on positions, because trades not taken are, take a lot of sort of decision making. It's a process as well to get to the point of I'm not going to execute on this, and that contributes to your overall results, your overall sort of sample set of data that we accumulate. It's the trades that don't make it that influence the insights that we get from it. And then some things that I didn't do too well this week. Some technical errors or more operational errors. I'm just not adjusting my MetaTrader take profit to align with my TradingView take profit. This resulted in me closing out more profit on Pound JPY. But as I explained kind of in that trade recap, or it might have been in my backtesting session, it worked this time, but there's going to be times where on TradingView, my take profit is hit, but then on MetaTrader, that order is not filled. And then price either reverses from that point, and then I end up closing with less than I could have. So that's not a habit that I want to kind of, not a habit that I want to continue. Not something I want to make a habit of. And then, I mismanaged the position and closed the trade early out of fear that full TP wouldn't be reached. And something I mentioned in what the things I've learned from, things I did well and didn't do well is that, look, the reason was logical for closing the trade early, but the price was just indicating that high time frame, price was just inducing high time frame key areas, which it kind of does before fulfilling those targets. And so while I had a logical reason for closing at that point was, there was an argument to be made that we weren't going to fulfill those targets. And, I consciously decided that the utility I would get from full TP being reached as opposed to taking profit at that point was basically nothing. There was no difference in, the utility that I would have between those two outcomes. Then it made no difference to me either way to close out at full TP. So, the process to make that decision was sound, but at the end of the day, it tainted my data in one way or another, because I do model my outcomes, and I know that there's, four things that can happen: a full loss, a partial loss, a partial profit, or full profit. A partial profit being, 50% closed at 2R and then price stops me out at break even. Not 50% closed, stops move to break even, and then closing in profit somewhere when I make a decision, out of discretionary analysis. And that, just because it just adds a whole different dynamic, a whole different variable that I now need to consider when looking at, profitable trades or just my data sets in total. So sticking to kind of my trade management plan is something that um, I want to do, and it comes down to what the most important thing is for the coming week, which I'll get to in a little bit. But that was one of the things that I didn't do well this week. And so, some of the key things that I learned from the things I did well and the things that didn't do well was that entries can be taken after very impulsive protraction if all parameters and confirmation are achieved. That just goes back to the setups that I did take, which followed the plan. I was doubtful because of the volume that we got at the open, which in the past would have probably scared me out of taking the trade. But I just stuck to the plan. And in the moment, I did actually make note of the fact that this is going to be good data for, my set, because it's either going to tell me that regardless of the volume, if, the trade ticks the boxes, then just execute. And these kinds of trades are possible. Or it was going to tell me that when we have volume like this, then I need to be mindful that regardless of the boxes that have been ticked, something could be changing. and trades like this could result in losses if that's something that I see over time. So either way, it was going to be good data for my current set of 20. And then, yeah, things I learned is that my TP, after adjusting it to be conservative, was more accurate than the initial optimistic TP. And I should practice being conservative in my TP placement. And that was on the pound JPY trade, because even though my order wasn't the same as my on MetaTrader's trading view, and I ultimately closed manually with more profit than I would have if it was set at my conservative order. I had that order there because initially my take profit was optimistic, and I thought it would extend beyond, where I eventually did move it to. But where it was initially priced didn't fully get there, if that makes sense. And if it doesn't, you can look at my trade recap on TradingView, because I do walk you through kind of how that played out and the mistake that was made, and you'll see that difference there. But essentially, it's just about, I think, managing greed and opting for that more conservative take profit. That's kind of just what I learned. What I can do better next time is checking that my TradingView and MetaTrader check TradingView and MetaTrader when an alert is triggered, just to ensure that the orders inputted speak to each other and that they're the same on both platforms. Sticking to my management plan, discussed that in a bit already, and then observing how price plays out if I'm sensing that things are changing, instead of acting impulsively, and I'll get to that in a bit. And then, yeah, completing the evening forecast before I leave the office if I'm not going to gym, or even quickly before I go to gym. That just goes into my daily TradingView upload that I should be doing daily, but to be honest, there hasn't been a week where I've been consistent with it. Normally, I think this week was a good week where I got 3 out of the 5 days done in the week, which is probably the max that I've gotten. But that's something that I'm looking at improving over time, is just being more consistent with those evening uploads that I do, because that keeps me more in sync with how the market's developing. So, yeah, if there's one thing, what is the one most important thing I can work on improving this week? It's sticking to my trade management plan, regardless of how I feel the setup is developing, because I have modeled outcomes, and this allows me to gather data in a controlled environment rather than observe how price. Yeah, allows me to gather data in a controlled environment, and I should rather observe how price plays out if I'm sensing that things are changing, instead of acting impulsively, even if that impulsive action was a result of sound decision making. Because at the end of the day, it contaminates my data set with variables that shouldn't be in there, regardless of how good they are. And so, yeah, that's what I want to do. If I do feel that something's changing, then it's something that I just need to be mindful of over time. And if I'm noticing only at the end of this data set, if I see that there's a lot of trades where I didn't reach full profit, it was a partial profit close, but price moved very close to my take profit and then came back all the way and knocked me out at break even, then that's something I can tweak or change going into the next 20 set, not make that decision now when it's not part of my plan, because that's not in my management plan. I rather just leave it and see how the trades play out, because I could find more often than not, when price gets that close to my TP, it goes in and hits it anyway. And then I've now almost reduced the amount of profit that I could have closed on by acting impulsively in that manner. So that's one thing I can work on improving this week. And then one thing I should continue doing this week is continuing just to be conservative in my take profits instead of overestimating profit targets out of greed. It's okay for the account to build gradually. I don't have to catch 5, 6, 7 R multiple positions each time. My minimum is 1:3, and it's that for a reason, because I only need a 25% strike rate, with a 1:3 risk to reward to be profitable in the long run. So we'll get to what the average is in a minute, but it's around 4, 5. Yeah. So yeah, 1:3 is more than enough to be profitable. As long as I have that, anything above that is a bonus. So be conservative, knowing what my minimum is. Don't aim or shoot for the stars. Let me build my data, and I'll do that gradually over time. So yeah, that is my weekly review. Um, Excellent way to end off the week. Excellent way to end off the quarter. Really good momentum, I think, going into Q4. Good focus, good discipline on in terms of my processes that I think have contributed to this really strong week. And I think now just coming to my quarterly review. Um, I'm measuring this at the moment in R multiple. I think at the end of Q4, I'll show it in dollars as well. But I think the dollars, not that it distorts, but there was a portion of this quarterly data that was all trades being logged from my 10K account, and then a much smaller portion, only 8 trades out of the 32. It says 28 here, but those are 28 that just contribute to the R multiple. So it's only 8 out of 32, so a quarter actually of the positions that contribute to the that were taken on the 100K account. So essentially, any profit that I make on that is going to be 10 times bigger. Any loss that I make is going to be 10 times bigger. So I think the dollar value isn't a good estimate. But what is consistent is the R multiple, because whether I'm trading 10K or 100K or a million, if I risk 1%, my R multiple is 1. If I gain 3, my R multiple is 3. So that's going to show me, I think, a much more accurate reflection, especially now in this quarterly review, of how I've actually done over this quarter, which 6.1 R, bro, I'm proud of that. Like, that is really good. Like, that is a solid R multiple return over a quarter. Um, if you assume 1:1, that's 6%. Obviously, it's not 1:1 for me, just because I do one risk half. Well, to this point now, I've increased it to 1, but I've been risking 0.5%. So it's not going to be 1:1. So it's not going to be 6%, firstly. And then two, I also don't, I close partial profits along the way. So I'll never realize that full sort of R multiple. So for example, if what I target is 6R, and I achieve that, what I actually bank will in reality be less than 6R, because I've closed a portion on the way. So there's a portion of that position that I've taken off. And from what I've calculated, I bank roughly 60% of the R multiple that I target. So, this would be about 3.5 R in reality, or 3.5%, if you want to call it that, in reality. But I mean, up 6R, if you're looking at it, let's say, if you want to compare apples with apples and you're looking at a 1% risk, that's a 6% return essentially. So which is really solid. Either way, it's a good R multiple. The trade win, which is percentage of the winning trades out of just the total trades taken, is 28%, which isn't great. And I think over this quarter, something I want to look at improving. But again, that speaks to what I was saying earlier, where I only need an R multiple of 1:3 to still be profitable, even if my win rate is at 25%, because I'm literally making up 3 losses with one minimum profitable trade, because it targets for every 1% I risk, I'm yielding 3% essentially. Profit factor, which is total profits divided by total loss, a factor above 1 indicates a profitable trading system. 3.49 is quite good. And then day win percentage reflects the percentage of your winning trading days out of total trading days. So on average, 42% of the days are profitable out of, yeah, the how many days is it? 15, 30 days where I executed a position. And the average win-loss per trade, the average profit on all winning and losing trades. So average profit on, okay. But yeah, I'm going to go into a few, I think, important or relevant metrics here. And we'll just stick to the overview for now, because this I go into a lot more detail on during my quarterly review. But if we look at just up at the top from the 1st of July, which was the start of quarter three, to date, which technically isn't the end of the quarter. I just wanted to do this week because next week is going to be more of a focus on my plan for the fourth quarter. But we only have 1 day left in September. So I just thought it is good timing to do this now. Best month in September. Again, profit is, look, the profit's a reflection of the account in this case, because I started the $100,000 account at the beginning of September. So this is essentially the return on that account, $5,334. In Rand terms, just under 100,000 Rand, basically. And then lowest month was August. That was minus $157. And again, that was on the 10K account. So that's about down 1.5%, as opposed to up 5.3% on a $100,000 account, which is about 5.3 odd percent. But it's an average return still of 1.7% per month, which is really good. So yeah, I think some stats that matter, and I've filtered this just to communicate what's relevant, given I've been on different accounts over this 3-month period, is my average winning trade, about $660, average losing trade 98. Actually, that's not too relevant just because, again, it's a dollar value. But yeah, total trades 32, winning trades 11, losing trades 21. Kind of like a 50% strike rate, which is quite good. Max consecutive wins 2, max consecutive losses 5, and that's been maintained from my previous revision. So that's quite good. Average hold time is fine. That's still quite long, which I'm okay with. Total trade days. So yeah, max consecutive winning days 3, which is increased from 2 the last time I reviewed my plan, and then max consecutive losing days 4, which yeah, hasn't increased, which is quite good. And then all of this is just dollar data. So yeah, average planned R multiple 4.56R, and average realized R multiple 0.22R. So I think this can definitely use some improvement over this coming quarter. because that obviously still means that I'm not realizing nearly as much profit as I initially target, at least over the quarter. I think month to date is going to be a bit different. But yeah, that's an interesting point there, that over the larger sample size, it hasn't been very consistent in that sense. And yeah, that's really, and its trade expectancy is positive, which is good. But again, it's a kind of value. But I mean, the fact that it's positive is a good sign. And so yeah, I think that's kind of just a dollar that's mattered. Just coming to Alpha Capital for my broker, just sort of transparency, just so you can see what's actually on the account. This is the figure that matches up with that September return. So you guys can see that we are still in the challenge. Last updated date. Yeah, all the figures here. It's kind of kosher. Yeah, this was both the positions for pound JPY, Euro USD that were executed, and then all the other ones that, yeah, I'm sure you've seen. So yeah, this is just to make sure that, well, show you guys that the challenge still runs on, and it's not like manipulating data in any way. So that is the quarterly review. And yeah, if I look at what my intention was at the beginning of the quarter, which arguably started with big goals being achieved for the year, obviously making that switch into financial services from a corporate perspective, and then now shifting my focus to preparing for the challenge and refining my plan, crafting my plan. Really, we're not really in refinement. We kind of just got out of the first draft, and then we kind of firmed up that first draft. And entering, I just wanted to enter the challenge with a concrete plan, which I truly believe I did. And it's only been a month, and I don't want to get ahead of myself and feel like I've got the holy grail of plans. I think it's far too early to really conclude and say that this is a plan that truly works, because there just isn't enough data on it. I've only taken 8 trades on it, which is nothing, to be honest. So I think from that sense, I kind of need to bring myself towards myself and just make sure that I don't let that euphoria kind of make me drop my guard and make me take my foot off the gas. But this is, I think what I'm seeing is a direct result, honestly, of just all the work that's gone into this plan, all the work that's gone into committing to the ICT mentorship, and learning that strategy. A strategy I'd arguably been trading for a couple of years, but just obviously through another source that had learned it from ICT. Now I kind of just went straight to the source. And so it's positive initial feedback. And this is the time not to take my foot off the gas, but to fucking dial in even more and pay attention and become hyper aware of what's working, what's not working, and continue to ride this wave. Because it's at least the more I take profitable trades, the more I can have months like this, the more, I can have quarters like this, the more it's just going to reinforce, I think, that subconscious in a positive way. The more it's going to add credibility to my data. Obviously, the more data we have, the better. And so I need to do the same, if not more, of what I've already been doing instead of letting up, which is why I'm really, really keen for Q4. I think if this much progress can come out of a month that, where arguably I was only trading for, a defined plan for about a month or two, not even for the full quarter. I started the quarter having no concrete plan. I was still learning the mentorship. There was weeks where I wasn't even executing, weeks where I took breaks. To being able to end the quarter in this way just makes me so, so keen for how much growth still lies ahead in this quarter, where I'm entering the quarter with high momentum, with a concrete plan, with you know so many things that I'm still looking for in terms of what's working, what's not working, but a system that I've developed that is yielding some really, really good results so far, and just wanting to dial into that. And if I can just continue on this for October, November, December as well, then it's going to set 2025 up and beyond for massive, massive growth. And so next week, I'm going to go into as much detail as I feel is relevant, but a lot of detail nonetheless, into what I'm planning to do for Q4, how I'm planning to keep the ball rolling, how I'm planning to dial in even further, and the things that I'll be doing to ensure that, one, I get this funded account and pass phase 1 and 2 of the challenge within the quarter, because I firmly, firmly believe that it is possible. And the more I get positive data from the trades that I'm seeing, that is reinforcing to me that it is 100% probable. Well, not 100%, but it is definitely probable. And what is even, more probable is that this consistency will lead to consistent withdrawals. And I firmly, firmly am holding a strong intention to make a few withdrawals this year, which is going to be game changing. And again, is going to set me up for 2025 to potentially scale to 7 figures. But we're obviously knocking on the door of 6 figures with this account. And there's still a lot of work to do. But we've got the momentum, got the drive. I just need to stay focused. But next week, I will share with you how I plan to do that. And yeah, I think that's going to be a really, really cool episode. So thank you guys for joining this week's quarterly review. A bit of a longer one, but these quarterly reviews normally are that way. But yeah, if there is one thing I want you guys to take away from this review, is that consistency is the choice you make when you start doing the things you know you should be doing day in and day out.